lot of these pro traders always know when to get in the market. It's like they always have it just right. They have to be using bots. They have to be using some kind of AI. No, I'm gonna show you how we do it with a free tool on TradingView in this video. Let's roll that intro.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, 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 trading get paid.
What's going on, guys? It's Joe here, and it's time to trade and get paid. I got a special one for you today because if you've watched like the last 4 or 5 videos, I've been giving you these different strategies, trying to give you something that might make sense for you. But in today's video, I'm gonna give you some pro tips. I'm gonna give you some things that are gonna help you to tie all of it together and to get perfect entries. And I'm gonna show you, I'm gonna reveal to you how the pro traders find these perfect timing entries. Before we do that, guys, if you haven't seen it already, you know I'm running 60% off. We're just about at 60,000 subs. So first, help me get to that 60,000. We're almost there. Share the video, like the video, comment below. Let me know what helps you the most out of this video. Which one of these steps that I'm about to show you helps you the most? Comment and let me know. And then help me push these videos out there to help more and more people. We're almost at 60,000. And guess what? I'm running 60% off Trade and Get Paid mentorship. Go to tradeandgetpaid.com, use the code TGP60K and get 60%, bro, 60% off. That means you're joining for 30 bucks. 30 bucks. You ain't never gonna find a better deal than that. Go ahead and join today. Let's eat together. All right, so there is a tool on TradingView that is going to change the way you trade if you haven't already started using it. Now, most of you probably have already heard of it. Advanced people, intermediate people, you already have heard about this tool. Beginners, maybe not. And I'm gonna give it to you today. Even the intermediate and advanced people, I'm gonna show you some stuff today that you probably haven't seen before. Don't tune out just because you think it's basic. Trust me, watch till the end and you will find value that is gonna help you take your trading to the next level. And that tool I'm talking about is the Fibonacci retracement tool. Let's talk about it on the charts. All right, guys, so the Fibonacci retracement tool is a tool that you can find right up here on TradingView. It's at the top left. You'll see the third menu down. If you click on it right here, you see it comes out Fib retracement. I have a little star on it, so it goes up into my tray up here. And so I'm just gonna talk to you about that Fib retracement tool. Let's talk about it. First thing you're gonna do is you're gonna select it. And before we go any further, I just wanna show you the settings. This is what it's gonna look like when you drag it out on the screen. I wanna show you the settings for it. And so if you go in here, style, you can set yours up just like mine if you'd like. Go ahead and take that screenshot, whatever it is that you need. Obviously coordinates is just where it's at on the screen, but this is the settings for my Fib tool, all right? So now, let me show you how to first properly use the Fib tool, and let me explain what the Fib tool is. A Fibonacci retracement tool, first of all, Fibonacci sequence is a series of numbers that typically repeat themselves. And banks, big banks, use these numbers to find levels in the market where banks do business. Basically, it's all about percentages. At the end of the day, we can make it all confusing, and I can sit there and explain to you the repetitive patterns of Fibonacci, but the truth is, all you really need to know is that it comes down to percentages. Banks work in percentages. They want to know how much discount can they get, how much buying power is available, how much supply, how much demand, and all of that stuff plays out in percentages. So if there's a 27% or a 61% or a 50% or whatever you want, all of it comes down to percentages, okay? Here's what we need to remember for in any market, okay? Price loves to live at 50%. Anytime you're above 50%, that means you're above average, and at some point you gotta come back down. If you're below 50%, you're below average, and at some point it's gonna come back up. Because no seller wants to sell below average, and no buyer wants to buy above average. Now there's interactions and there's negotiation that happens and meetings on the chart, I get that, but at some point when something is too far over above average, it's going to come back down. And when it's too far below average, it's gonna come back up. Every market does it. We see it in real estate, we see it in every market, stock market, no difference in Forex, all right? So the most important level on the fib tool is the 50. Then you have, of course, the 0 and the 100. That is your low, your high, and your middle, showing you where price wants to be. If it gets above the 100, it's overextended. If it gets below the 0, it's under. If it's at the 50, it's at average. Just that simple. So now that you have that explanation, let's take a look at what the fib tool is gonna actually look like. So the first thing you have to have in order to have a fib tool, or in order to use a fib tool, is you have to have a trend. So you have to have a market that's moving in a certain direction. As you can see here, the market is moving down, and so we can use a fib tool. The first thing we're gonna do is we're gonna go from the high to the low. All right, we're not using the whole thing yet. We're gonna get there. But I just wanna look at each one from high to low. So if you go here, you're gonna start at the high point, click, drag it down to the low point, and then spread it out. So there you go. You have a high, you have a low. In other words, what it's saying is, this is the very bottom of price. This is the very high of price. And that 50% area is average. So if price goes below the 0, like it does here, that means that it's continuing on down and that a trend is continuing. If it comes above the 100, that means there is a 100% retracement. In other words, it's a full reversal, and now we can start looking for opposite direction. In this case, we'd start looking for buys if it broke past the 100, okay? Now, the next thing you need to understand are the levels for the fibs. So let me drag that out one more time, and let me show you something cool, all right? So now you know you have the 100, which is 100% retracement. You have 0, which means 0% retracement. It means it's below the current trend. You have 50, we already talked about that. Now, these are the other common areas. You have between the 12 and the 23, which is just before you get to your quarter point. You have, once you get past that 25%, then you're pretty much going on into that middle range. But you have that 2360 and you have the 1240, and that is your first area where price is gonna say, you know what, maybe we shouldn't go back up, maybe price is gonna continue extending. That is what we call a shallow retracement. If price moves down and then only moves to the 12 to the 23 and then continues down, that is considered a shallow retracement. Then you have the 38.2 and you have the 61.8, which surround your 50. Those levels are very important also because they give you that middle area that surround average. Price always moves dirty. It never just kisses the 50. It's not just gonna come and exactly go to 50%. It's gonna get in that range because there's constant movement and fluctuation in the markets. So we have that range there, what we would call an average retracement or a standard retracement. Then you have your 78 to your 88 and your 78.6 to your 88.6, which is what we would call a very deep retracement. If price comes all the way back to the 78 or beyond, that's a very deep retracement. At that point, we're probably looking to see, is it gonna continue to go past the 100 and potentially be a reversal and go into an opposite direction. And obviously if it gets to the 100, then we have a 100% retracement, and that means we're in a reversal state, okay? So those are your levels explained, and I hope that makes sense to you. Before I go further, comment below if you have any questions about the levels. Comment below if you need to understand why those levels make sense, and maybe I can do further videos to help you with your questions. The second thing we're gonna talk about, really, we got how to properly drag it. I showed you my settings. The next thing we're gonna talk about specifically is this golden zone, okay? The golden zone is the most powerful zone on the Fibonacci retracement tool. What the golden zone is, it is the deepest part of that middle area. And what it's saying is, if you get to that 61 area, that is the most likely area for price to reject before continuing in the already described direction. So if you're in a downtrend, the most likely area for price to come to is the 61.8 between that and the 50. So that is called the golden zone. It means that price is at average, we've pulled back, we've grabbed all the opposite direction retail trades out of the market, and now it is time to continue down the way we were already going. In this case, you can see price moved down, it came back, it rejected the 61.8, and then it pushed down into the 100 before having another retest, okay? Which I'm gonna get to that in a minute because that's also very interesting. Remember, mark that point because we're coming back to it. So you have a 61.8% retracement, it gets into the golden zone, you see it wick out, and then you see a beautiful move to the other side. Awesome, all right? That's how we trade the golden zone. Now, before we move forward, let me show you something else. Let's take a look at what happens when you have another move from here to here, okay? So now you look, you see it gets to that 61 and it just starts wicking out. Even though there was a big wick there, and if you go back and look, there was some news at that 8:30 time. You see it's 8:30 on the chart right there at that candle. You'll see that there's a big wick down, a big wick up. This was a news candle. Actually, this was really just a golden zone retracement, and news pushed it up to the 78.6, all right? So either way, deep retracement with the news, but we see that the golden zone is still very powerful, and we see it push all the way down past into that 100, or into that 0, I mean, and then it, you know, continues back up. So you see that there, the golden zone is also very powerful. Let's look again from here to here. You see here, price moves down. You get a pullback right up into that 61.8 again, into the golden zone, and then it pushes again, okay? So you can see over and over again how price continually respects that golden zone. That's why it's so powerful to know where that golden zone is. What is actually happening is price is pushing down, then it's coming back to average so that more sellers can get in. Just the same way in an uptrend, it's pushing past and then it's coming back so the buyers have another opportunity to buy. Because if it gets too high without retracement, then it prices the buyers out of the market. Same thing with the sellers on the downtrend. So now, remember I said we're gonna come back to this, and I wanna show you something that is just gonna blow your mind. So right here, this is it. I'm gonna show you something right here that's gonna just rock you. You ready? Here we go. Watch this. Remember I showed you this, all right? So you have the golden zone right here. It rejected at the 61. And then I told you to take a look at this. Well, here's what's interesting. This is what we call fractals, okay? Multiple time frame analysis can happen on one time frame. We're looking at a 30-minute chart, all right? Now, here's the interesting thing. I want you to look, you see it right there. I'm showing you the golden zone. It rejected, pulled back, retested, and pushed back down. Watch this. When we come here to this high, to this low, look at what happens again. It pushes down. Now this is a zone inside of a zone. Pushes up, rejects that area, and pushes back down. So now you have a golden zone inside of a golden zone. This, what it's showing you is that this is the 30-minute golden zone, and that if you were to look on a smaller time frame chart, let's say a 5-minute or a 15-minute, you would see this as a whole move, okay? Because what's happening here is you got a high to a low and then a pullback within the bigger pullback. So watch this. Let me show you what I mean. Here is your big move. What I'm showing you is that you have a move down, a move up, a move down, right? So you have a high, a low, a lower high, and a lower low. Real easy. However, watch this. Inside of that, you have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Let me change the color on that so you can see it a little bit better. So you can see here that on the green one, on the 30-minute, you have a trend. But inside of just one wave of that trend, you have a whole nother trend that's smaller. Why is that important? Well, watch this. I'm gonna show you something. Let me get rid of these marks off the screen. That is important because now that gives you a precise entry. What it does is it's saying, I don't wanna go into a trade and then wait for all this pullback and wicks and all this stuff. What I would rather do is see this push out, wait for the retest, and then enter at the break of the smaller time frame golden zone, because now I have full momentum and the pullback is already done. Now it is nothing standing in my way, right? There's no big wicks, there's no big pullbacks. I can just get in, boom, get out. And now I have a smaller time frame. I can go in and scalp. I can go in and get day trades, and I don't have to think about what the larger time frame looks like. What I'm doing is I'm seeing a rejection of the bigger golden zone, and then I'm getting the precise entry by looking at the fractal, okay? So take notes on that. When you can start to see the fractals inside of your larger time frame trends or inside of your top-down analysis time frames, now you find precise entry that's going to give you beautiful pullback entries that are going to get you high reward, low risk trades. Fire. I mean, bro, fire. Just using these staggered golden zones. Just seeing a golden zone with a smaller golden zone in between. Those fractals are fire. When we start to understand how those golden zones line up, man, it changes everything. I showed you this one, okay? So you got from here to here, you got the golden zone, all right? Now, watch this. From here to here. Big pullback, but then a shallow retracement. Why is that important? Because now we know that yes, we have a retracement and it's gonna go, but this trend could be coming to an end. We need to take a real look on this lower time frame as to how long we really want to hold when we're only having shallow retracements. Why is a shallow? See, some people will tell you that a shallow retracement means a strong trend. Yes and no, because actually a shallow retracement can mean that there's really not a lot of buyers left, so that the buyers did not have enough control to really dictate price. A shallow retracement means that there's not that many buyers left, so they only move the market down for a small amount of buyers to come back in. Meaning that the next move for the buyers is probably not gonna be that big. So what happens? It pushes down, and now what do? We come from here to the bottom, and look, now we're at a deep retracement, 88. Now we're seeing a reverse in strength, and now we see the market going in a different direction, okay? That is a powerful understanding, because look here what happens next. But here's what's interesting about that. Even when we see that, we see a golden zone, a golden zone, a golden zone, a shallow retracement, and then we see a reversal. That's it on the smaller time frame on the fractal, but when we look at it on the bigger picture, watch this. Look at that. It just came back to that golden zone area. And what I'm saying is the fractals were telling you when this was gonna turn around for the next big time frame retracement. Man, get a hold of that and that'll change the way you trade. Get a hold of that and that will change the way you trade. I'm telling you, get a hold of fractals with these golden zones. Last thing I'm gonna show you real quick, and this is a really nice pro tip, okay? When we drop this fib, most people are teaching you to drop it the way I've been showing you here. And I've been waiting to show you the right moment, okay? They say, they just drop it like this, they just take it from high to low, that's it. But see that diagonal line right there? That diagonal line is there for a reason, because Fibonacci retracement measures two things. It measures price and time. Price and time. And if you can master both, you can get, beautiful entries, and it doesn't even have to be the way you think. Watch this. Here's a trick, a pro tip on how to get beautiful entries on your scalps on your Fibonacci. Watch this. When we drop the fib tool, here's what I want you to do. I don't want you to drop the fib tool and just go high to low. That's it. What I want you to do is I want you to find structure. So it pushes down, it pulls back up. There's your first point of structure. I want you to go from high to low, but I want you to make sure that that trend line is on structure. So A, B, right? 1, 2, go on through. Now here's what happens. You see that push down, you see it push up, and when you see a volume break of the trend line right here, you can get a beautiful entry in the market because now you know price is trying to get back up to that golden zone, right? So you can either target the 50 or the 61, that's up to you. I'll let you make that decision. You can put your stop loss back to the 12, and there you go. Beautiful trade, beautiful scalp, just like that. Boom, you're in and out of the trade. Nice little day trade, counter trend, but you know it's gonna happen because it's coming back to the golden zone. That's one way you can trade it. The next way you can trade it, just because you have it set up right, is when you see the rejection. Now you see you have a pin bar here. You see it's at the golden zone and you have a pin bar. So what I want you to do, let me make sure you can see this real good, okay? What I want you to do is I want you to see how it's at here. Watch this. I want you to drop a line on your 61, drop a line on your 50, okay? And what I want you to do is you see this pin bar right here, rejects the top. You wait for that to retrace to the 50% of your pin bar. So you see right here, just like this, you take your fib from top to bottom just of your pin bar. You can put a line on that 50, just like that, get rid of it, and you enter when price comes back, pulls back, and when it pulls away from your 50. Now, here we go. Watch what happens now. You put your entry at that 50. You put your stop loss behind your tail or 1.5 times your stop loss. And then you can target back to the 0 because now you know that this is gonna be a rejection and it has to try to retest that area down here. It's going to try to create a lower low. So now look at the risk reward on that trade. And now you enter the market, boom, instant profit. It comes down to the 0. Now, if you want to be conservative, you can say I'm gonna just go to the 12. That's fine. There's nothing wrong with that. Let's say you do that. Price just drops, comes to your 12, just like that, and instant profit, and now you're trading with the trend. Guys, this is powerful when you can understand the power of the Fibonacci retracement tool. All right, guys, there you have it. That is the power of the Fibonacci retracement tool. That is just a couple of different ways that we use the Fib tool to find good entries and to find fractals in the market and to see, you know, like the strength of an overall move. Are we in a retracement? Are we gonna continue down? You know, it gives you so much information with one free tool. Use the Fib tool, it's powerful. Use fractals, they are powerful. Use the rejection zones, they are powerful. Make sure that you have a good risk to reward when you enter the trade. If you have a bad risk to reward, there's a reason for that. Don't take the trade. But if you have a good risk to reward and you have all the rules met based on this Fib entry, go back and use one of these strategies I just showed you. Go find that supply zone and then see how it lines up with your Fib tool. Go check out that moving average crossover and watch how those crossovers happen at the 0s and the 50s and the 100s. Go back and check out those strategies and see how they measure up with this Fib tool as an extra added confirmation to take your trading to the next level. If you want to know more, because I got so much more to say about Fib tools and how to use these percentage-based trades, check out Trade and Get Paid. Get that 60% off before it runs out. TradeandGetPaid.com. Become a student today and win with us. We are killing the game, over 90% wins on all of our trades for the whole year. We are killing it. If this video brought you value, make sure you smash that like button, subscribe to the channel, and we got plenty more content coming. Stay tuned for the next video. Peace.